Hello everyone and welcome to today's Stocks and Crypto TA live stream with me, NoFOMO Charts. Today is August 28th, 2022. It's about 10:30 p.m. Eastern Standard Time. So just to review last week's stream, I was saying that essentially the stock market was not in a oversold condition. So then the market did sell off for 3 days. And then I remember saying on my stream that we might have an oversold bounce somewhere along the Wednesday. In the middle of that week, we did get that bounce. And then if you're in my Discord, also last week, I did say, watch out for the Jackson Hole Economic Symposium and Chair Powell's FOMC speech regarding interest rates and inflation, which would cause significant amount of volatility in the market, and the market crashed on Friday. And futures is pulling back down as well as we speak in a reaction to that speech on Friday. So my stream is more of a swing trading and investing stream. It's not a scalping, sniping, or day trading stock stream. It's more of swing trading, and we're focusing on daily, weekly, monthly moves, sometimes even in intraday as well. But one of the reasons why I focus on the big picture is if I was too hyper focused on, let's say, meme stocks or, smaller cryptos and altcoins, you miss the bigger picture. It's important to understand the bigger picture of what's going on in the market, stock market, crypto market, global marketplace, and longer term timeframes. So let's start with S&P 500. Let's start with the weekly. I remember I did say almost verbatim last week on the stream, if you're a dedicated viewer and follower, is their shooting star, another shooting star could mark the top of our move, which was 100% correct. And we pulled back down to a support level as well that I marked last time, right? Hit both of our targets, 415, 409, actually pulled back a little bit more. So in this particular case, we need to check out futures. We had a little bit of a gap down. Now I'm looking at S&P futures chart, which did fall back down to our support as well. We want to watch out for this daily head and shoulders that was created in the market. So that's about 4%. If we go down 4% in the market, it could take us down to 3964 on S&P 500 futures. Let me turn this into a gray line. S&P 500 futures, if we go down 8% over time, that could be 3803. So those are our two deep bearish targets. We almost hit the first target already. This is long term though, because we hit the bottom of this, the wedge. We crashed back into the bottom of the wedge. So what we need to watch out for on the S&P 500 is, will we get an oversold bounce this week? Yes or no? Because if you're in my Discord, which I will bring later, if you're in my Discord, we have some earnings this week. Most of the earnings for stock market season is over. But now it's all about inflation and interest rates and economic data, unemployment, job openings, etc. This week, though, we still have Best Buy earnings, so that's kind of a big deal. There's HP earnings as well. And then you have some smaller food companies like Hormel Chili, Hormel Foods, and Campbell Soup, and a couple other retailers. So if you're in my Discord, that list is in there. There's significantly more economic data. But what I'm saying is the setup for this week is, okay, now that we crashed into, it's not daily oversold. So we're not at a June low in the stock market. It's far from it. There's no massive bull divergence or bull momentum that's about to push us back up. There's an intraday setup here. There could be a morning star pattern, right? So if we zoom in to our 4-hour chart in S&P 500 futures, is we do have the low, the lower high, the lower low. And if we establish a lower low this week, we could bounce up to the lower high, right? Because we have a double bottom potentially on this 4-hour RSI, and it could build momentum in the next day or two or even this week. Okay, so the hourly is also, because we're at a relative trendline support. Let's see if there's a pivot point. It's close enough to the pivot point. Well, we hit the daily pivot point, so there's multiple invisible layers here. There's a 4,000 level as well here, and the hourly momentum is building. So the retracement, if we do a simple Fibonacci retracement back to back, is we could bounce up to 4085, which would be approximately 1.5, 1.4%, which is a lot for an index. That would definitely hit the news. And we do have this double bottom type of price structure on the 15-minute with the open MACD. So it looks like the Asia session might sell off. European session might sell off as well. But in terms of the information of the FOMC interest rate hikes that are incoming for next month, is that fear getting priced into the market? It is ongoing. So to sum it up is, are we going to start a new downtrend or not? Because if you look at this left side from June, July, and August, which I'll draw in the vertical blue right to here, blue to the blue, right? This thing is uptrending. The problem is we are starting a potential downtrend, right? Because for an example, we can look at March, the beginning of somewhere around the beginning of the Russia-Ukraine war, is if we're in an uptrend, right? The downstairs pattern, right? You have a big crash and you have a bounce, and you have another crash and a bounce, right? So it's downstairs pattern, and then it starts downtrending hard if it gets enough downside momentum. So copy paste that, uptrending, right? Then you have a big down crash. You have a attempted rally, a big crash. So there should be, at some point, if we establish the low, we should have that lower high and get that bounce. But long term, we could pull back again, right? So just watch out for that. People, that's why I'm saying I always try to focus on global markets, stock markets. So I was not surprised at all any of this happened this week, because we got ahead of it on the stream last Sunday. Same thing with crypto. So if we do not want to get blindsided as traders or analysts, it's just like business and corporation schedules, is you just get ahead of it. All right, let's take a look at NASDAQ. I'll try to speed up here. Try to do this in 1 hour and then we can sign off. So same thing last week is I was saying, watch out for the potential evening star action on the weekly. That's why a lot of big hedge funds were selling institutions weekly, shooting star into a pullback, into consolidation, right? Now we have our daily, we got our rejection, and we want to watch out for this potential head and shoulders formation. Another way I can interpret that we lost support is you just draw a line, and once it violates it to the downside, that's significant. We also have the head and shoulders, the neckline breakdown, that's 6%. That is a lot for NASDAQ. 294 would be our downside target supports. I'll just leave these. We hit all of our targets on the way down. And negative 12% would be 275. So the long-term target is 297, 275. Now, the problem is, just like S&P 500, is we went from an uptrend into the potential start of a downtrend. This is not a pullback. Why? Because the pullback would have bounced up from here and kept going up. We had really bad bearish news of interest rate hike. So Fibonacci, this sideways, we're lost our 382. We're probably going to hit the 50% on NQ futures. See if that is true. I switch over to futures chart really quick. Right there, right on the 50%. But then we want to watch out for, we're going to get a Morningstar pattern bounce this week. So now we're on a different chart. 4 hour oversold. Not quite ready to pop yet. The hourly is oversold. 15-minute is oversold as well. So we might see again the next 24 to 48 hours a potential small attempt in the bull rally bounce. A little baby short squeeze, maybe 1 to 1.5%. Watch out for that. But the opposite is true. We could keep selling off, because if retail gets very scared, people are starting to get worried about inflation, interest rate, and recession. So people keep getting scared, they're going to keep selling off. That's why we need stop loss and risk management. Let's go to Dow Jones. And you might be thinking, why am I looking at the same thing 3 times? It's actually not the same thing because it's 3 different ETFs. So again, shooting star, shooting star, shooting star on the weekly. Again, this is our 3rd time this happened this week, and we pulled back right to the support level of 322.59, which I marked last time on the stream. So also this trend line was violated. So as soon as one day after the stream last time, Monday, I knew, okay, something bad is happening, because once we crashed down, and I day traded this short and long, and I actually didn't trade Friday because from my experience, I want to see what the big money is going to do, and they sold off. That's fine. That's fine. Right? I closed my long position over here somewhere. Right? As soon as I knew, oh, we lost that. Okay, I bought Netflix way down here, one of my stock positions, July. I sold it right here, out. So it's important to understand and know, like, what's our goal in the market. My goal was not to hold Netflix for forever. It was a swing trade. It's a 4-hour. We hit that low RSI, the Dow Jones, the low as well, but it's not quite as super oversold as S&P and NASDAQ. The futures, we did double bottom, but the problem is at the time of making the stream, it's Asia session. We're going to European session. So it could bounce for Asia and European session and be up here tomorrow morning in the USA session, and then we could crash in the USA session. So it depends on, the data at 9 o'clock Eastern Standard Time. That's really going to dictate which direction we're going. So this is more of a swing trading stream. Remember, this is not quite a day trading stream. All right, so now that we have that calibrated into our bearings, we understand weekly consolidation to the downside for all 3 indexes are underway. It's not quite oversold in the daily, although we're at a trend line and relative pivot point support, horizontal support. Once we get into the swing trading area, we have a 1-hour, 4-hour setup. MACD bullish momentum's building. It's not quite ready to pop yet, but it's building. That chances are higher that we could see a bounce in the next 24 to 48 hours, unless there is a significant bearish reaction in the market. Okay, let's go in and flip gears now. We'll flip over to pop over to US oil, see what's going on over here in this. We're just going to use the oil futures for more significant data. So oil futures, we'll just get the weekly trend lines up here. Just a very, very powerful chart because of what's been happening. Global supply and demand. If I use this particular almost weekly channel, oil is starting to show some weakness because it's been in an uptrend for 2 years. This could be interpreted as some kind of weekly double top resistance at the 120 area, and it's pulling back into a current downtrend for investors. This last price action, it's just angled down, right? We went to uptrend, to consolidation, to a downtrend. If we're really honest with ourselves, although there is momentum building for one more additional pop. The 4-hour, with this double bottom, there's a quick setup here on August 18th with this 85.50 low, this 86 low. And we hit this relative double bottom. It's really hard to see this, but sometimes when oil gets kind of oversold, you get a little bit of this mini rally. But for oil, because of all the volatility, I'm going to stick to longer term time frames here, and we could see we had a trend line breakout attempt. So I'm going to just watch this carefully, this little mini descending wedge, and we had the breakout, almost like Bitcoin. So if we can pull back and hold above 89.50, maybe we'll get a little bit of a rally attempt pending news. Let's go to natural gas futures as well. So natural gas futures, the last bull setup I had marked way back here in June, July, saying watch out for this pivot point down here, which we rallied. 57% from that low, right? So sometimes if you're an investor, if you're a right, I put alerts here for the breakout for anybody who was watching that stream. It was a long time ago though. That's July. So it's about 70 days ago, but now someone would definitely need to sell that swing trade, right? Can't hold it forever. Why? Because the bearish momentum is starting to build on the charts. On the weekly, it's losing momentum. So let me erase these alerts. Right? So now we're in the mentality of, all right, closing the natural gas swing trade from July. You can see that we're losing momentum, and then we have the bearish pattern with the double top at the $10, $14 level. Just leave that there for next time. So if it starts to pull back down, and this is not all TA charts related, is it could pull back down to 751, pull back immediately down to 832 as well. We should draw those 9, 8, 7, 670 as such. But you can see that if it's going to pull back down and go into a hard downtrend, probably the $6 range could be a good level for bulls. Bears, I mean, it's near the top, so unless it breaks out, there could be a short play here. So I'll just leave it there in terms of the daily chart. Let's go to gold. We're on GC1, paid data, we're on gold futures. So pull back on gold, just like the stock market. If we zoom out here on the weekly chart, we could see that gold had a little bit of a pop-up rally, but still in a weekly downtrend, right? So now I'm thinking, well, okay, if gold is not going to be our safe haven, there's only two outcomes. It's going to bounce up to 1800 or pull back down to 1700. So we could just play those two levels and just watch for it. The daily is not quite oversold. There is a little bit of this resistance trend line up here on this top side. The 4 hour, it's not quite oversold. And the I'm just using the RSI because it's one of the most popular indicators with moving averages. So I'm just using like a very popular indicator oscillator package for people, right? And like I was saying on last week's stream, it wasn't super oversold on 1 hour, 4 hour, or 5-minute 15. 1 hour is like maybe, but that's why I was anticipating we're going to get a crash and then a quick bounce last week. That's exactly what happened. And then extreme volatility. So for this coming week, it's a slightly different story. We were here last time where it was oversold, saying we could get that bounce. We did bounce on gold and we pulled back down on the pullback, the global pullback. So now what remains to be seen is how low are we going to go here? Low, high, where's the lower low? Can we go lower? Definitely. Because it's already starting to death cross on a 4 hour here. That's not good. Death cross on a 1 hour. So unless the scalpers come in and 15-minute day traders try to push this up, we could actually reject further down to 1750 or 1700 before attempting another rally. Okay, on that. So let's go to silver futures as well. Where's my silver futures? It's SL1. So on our weekly, just take a quick look at silver because sometimes it has some kind of effect like on Ethereum for some reason, a little bit, just mentally. So, right, because they're all related. We have this weekly trend line and silver was not really doing so hot in terms of, for a while, it was just kind of downtrending and then we had a big deep pullback down. It's not super oversold. There is a little bit of an interesting formation on the weekly oscillators. Our daily, though, it's very similar to gold. So the support we need to hold is $18 and $18.35. If we lose that, then definitely the bears are going to try to short it down further. Low, high, low, high. So we need to hold this 18.25. If we don't, pull it back down to the downside. And if it bounces, that's fine. Like that. Right? But trying to play this right now there's not an exact perfect setup unless you're a day trader. It's 5-minute 15. It is 5 minutes are starting to bounce on the futures. 15-minute is still in that little oversold area. So we could see a bounce, maybe about 0.5 to 0.7%. Okay, let's speed up here. Let's just take a quick look at a couple of the major tech stocks by market caps, mainly tech. So I'm just going to go quickly here. We can start with Apple. So on my idea, yes, I did publish my Apple short a little bit too early, but I was saying on this side that the literal bearish momentum is building. It took a little while, and then I did feel that we topped out on the charts 175, 176, so I did short Apple up here as well. But you know, this lower high, our excuse me, our big deep support is 159 to 155 down here. That's a 3-2 and the 50% retrace, which I'll leave for next time. The 236, we already lost that, right? So for Apple, the shooting star was there just like last time. Okay, so we want to watch out for the correlation there. Weekly, we're already starting to lose that momentum. The weekly bounced RSI pretty high for a weekly chart. And this is a very obvious play. It's just Apple was going to be the last, like, you know, domino piece to fall for tech. So the same. Thank you. We have a comment on TradingView. Okay. So it's an interesting comment by Steve here on TradingView saying, thank you for the like. Thank you for watching and following, everybody, by the way. If you want to just like say hi or leave a comment, feel free. But he read that physical metals, I think you're talking about supply, are low in the vaults. Yes. So if you just popped in now, I just did 20-minute analysis of futures. So basically, I literally just went through all these indexes. So we did pull back down. The 5-minute, watch the 15-minute and 1 hour because it's very oversold. So the two scenarios is if people get spooked, meaning if whoever doesn't know about the interest rate is going to find out this week, like what Jay Powell said, Chair Powell. So, you know, people, we might actually see additional selling, right? In terms of people who don't know, or they're just like about the news, or they're just going to panic sell because it's down, like the market was down like negative 4% on one day, right? But then also is we're looking at the market a little bit early. It's Asia European data. So, you know, we're not looking at 9 a.m. tomorrow morning or 9 a.m. Tuesday morning. So we could get a bounce as well. It's just when is the sell-off happening? But we are close to a trendline support, right? That's why I'm not going to call that we're like 100% going down. It's because on a 1 hour, we hit this trendline support. There's horizontal and trendline support. MACD histogram bullish momentum's building, and we have a lower RSI reading. So at some point, we might get the bounce. That's what I'm saying. So just watch out for that. If anybody's trying to short down here, beware, right? Because, you know, the proper time to initiate the short was Friday morning, not Monday night. You know what I mean? Like Monday afternoon, like it's too late for a day trade. Okay, let's just move on here. I'm trying to cap off at like an hour. But so for Apple, just watch out. This is because Apple's the biggest stock, it has a very similar reading. So just watch out. If we do sell off more, that's fine. That's totally normal. Continuation sell off is totally normal here. But if we do happen to get a little bit of a baby short squeeze, if we intraday establish some support, like maybe at 160 or 161 or 162 even, and then we get a little bounce, you know, day traders are going to try to scalp that. Okay. So let's move on here. Let's go to Amazon. Amazon very precisely hit our target, 129.95, right on the X and the two blue lines. So I'm just going to erase this now because it's getting a little sloppy. What you want to watch out for is the rounding top. We did hit this trend line support. So this is kind of that deeper target here, this 125, 126 area. Okay. And for me, I'm a technical trader, so I follow the technicals because the news gets priced into the technicals at some point, right? Like if somebody didn't know about the Chair Powell speech, all they need to know is we had a big red sell-off day on Friday for just whatever reason, right? The big question now is this going to trigger our downtrend? If that triggers our downtrend, we're in for traders are in for investors are in for a world of pain. And it's okay. I was telling one of my colleagues a couple weeks ago is we can pull back very significantly and still be able to hold. We could pull back on indexes, you know, halfway or 60% of the way down, and we're still fine. But we do have this big gap support here on Amazon, which we did pierce into. So it's very similar setup to Apple as well. Is that the 1 hour, 4 hour? The 1 hour is getting oversold, the 15 minutes oversold as well. So we'll see what the day traders do tomorrow. If they're going to close their short positions, we'll bounce, short squeeze for a day or two, or we keep selling off on continual fear and worry. Google, this one, it's so hard to see this one, but Google as well. We hit a resistance. So this one was a little more obvious, right? We literally hit the perfect resistance spot, and now it's at the support zone. So I would watch the support very carefully. 109, 107. We did have liquidity all the way down to 103, 105, 108. Watch out for that. So again, the daily is not oversold. The weekly is not oversold either. So these are more day trade, swing trading plays if we're patient and disciplined. Watch out for the we could get a piercing down below and then a reversal reaction on that as well. Let's look at Tesla. I know some people trade Tesla as well. Tesla kind of holding up because it's Tesla, but large consolidation pattern up here. And just to reiterate, let's just watch. If anyone wants to rewind the stream like 1 or 2 weeks ago, I was saying watch out for this double top resistance right here. This is resistance right here at 311. Well, actually, it's a different price. We had a stock split. I believe it's 3-to-1 stock split, which happened on the activated 4 days ago, 24th. So now the price is different. But we had the double top here, and then where are we now? We're down exactly 6%. That's a perfect short. So good in terms of the gains. Very good. But now you see we're right here on the trend line support. That's why I'm not getting too excited about it. We have to lose this support, literally lose the support level. If we measure the double top formation, it should go 9% if it's going to be perfect TA textbook. So watch out for that. Again, if all the stocks start losing our support, we could be in for a world of pain to the downside. Want to watch out for it. Okay, so again, I'm not just doing chart analysis here. I am trading as well. So I had a very profitable week last week. So I didn't really have to do much. You know what I mean? In terms of like, I don't have to chase every single stock moving in the market. As I hit my profit target, I'm done. Discipline. Move on. Look for the next setup. Right? I'm not going to dilly-dally, just kind of hanging around the stock market, talking to people. No, just move on to next setup, you know. Log in on my spreadsheet, take the profit, look for next setup analysis. World keeps spinning, market keeps moving, move on. Right? Don't get too emotional about any win or loss. So that's just my style, my mentality about the market. So just watch out for this. Okay, watch out for this. That's why I do a lot of TA charts. I'm not really into just talking and doing nothing about trading and charts. Like, I'll do the charts, and then if it's a good setup, I'm gonna execute it. That's just my swing trading style. So just watch out for that. If we lose this support, you could see the obvious downside targets. Very, very obvious here. 236, 382, 50%, 6.8. Okay, so just watch out for a potential if this downtrend starts for the next 3 months. It's pretty easy, put option or short for Tesla. Okay, let's do a couple more stocks. We're gonna running out of time here. Let's talk about my NVIDIA short, and let's talk about my short idea. So if you're a follower, appreciate it. Sometimes I publish ideas if they're kind of big, obvious ideas, and in my Discord, you'll see me close trades, and you kind of figure out what I was trading. But NVIDIA, this is a straight up free idea I gave to every single follower on my profile. I said the potential double top. I think I published it right here on this day. This particular candle is right at the top. So I say, watch out for this bearish double top. And I drew the exact resistance lines and it hit that exact target. So that's a negative 14%, or if somebody was conservative, negative 6% to negative 14% free profitable short setup that only took how many days? It took like 7 to 10 days. That's longer term swing trading. Totally perfect setup. The problem is now is that setup is over. I need to close that idea, right? Now I'm moving on to the next idea is, okay, if it's pulling back, can NVIDIA survive in the weekly upside down head and shoulders for investing? Can it survive? If the market survives, there could be a 33% positive profit investment in the future if there's a big if the market survives here, right? If we lose support, how does this setup get canceled? If we lose the support of 145 or 155, if we lose this bottom side here and the price goes down, game over, canceled. Bear market continue part 2, right? So I'm watching that very carefully. They had like soft earnings, like positive earnings. It wasn't enough to, kick the market back up. And again, my thought process was all because of what's happening with supply chain globally. I understand, what's going on in terms of like supply chain, interest rates globally, and NVIDIA. They gave hints in the news that their sales wasn't doing so well. They have overstock of some 3000 series cards that are going on sale, so you can kind of feel it. Same thing with AMD. They had the same issue. Retailers all had that same issue, and the PC boom of the pandemic is like slowing. So somebody could deduce that, all right, maybe it's going to short down on that. Slightly better odds. I usually don't like to predict earnings unless you have like a lot of evidence publicly that you can create like a case argument for something. It's not for beginners, I would say, intermediate to advanced. All right, so the 4-hour and the 1-hour as well. Just to finish off this, so that's the next idea, right? The short idea is basically over. We hit that. I mean, if we hit the super M, okay, then we could go -8 to -16%, which is actually coincidentally the support level is already marked. All right, our H4, it's still starting to downtrend, right? We're at the support level. So I'm not going to call this as a bullish bounce just yet. I need to see a little bit of evidence in that morning, 9 o'clock, 9:30, that, okay, we're going to get a bull move. And then you might see NVIDIA and AMD bounce couple percent. Let's take a look at AMD. And then we're going to move on to crypto and then close out the stream. So AMD did want to say, right, this was kind of an obvious resistance level where it's not quite perfect. But you can see we had an attempted breakout on AMD. People got really excited about AMD. So there was a lot of momentum back in May, June, which I did go long here on AMD and traded this multiple times. And then I did short AMD at this top up here multiple times. If you're in my Discord, you'll see when I close the trades in the morning. So the daily, though, we're riding that resistance. So if it's very obvious setup, if we need to hold above 91 or 85 or 80, right, or like $100 as resistance. If we lose that, you can already see the consolidation play. But sometimes this can be a continuation. Sometimes, if not, it's just going to fall back down into the support channel. What I want to watch out for is we hit this 236, rejected down, we pierced down to the 382. Now I'm looking straight at this 50% as the support level for my next potential entry, somewhere in this like 86 zone. So anywhere 88 to like $83, that could be the next potential setup to try to make some profit in the market as a quick day trade or swing trade. So our 15-minute is oversold, our 1 hour is oversold, but let's just see what happens with the market in terms of the reaction, right? Because some people were not paying attention on Friday to the interest rate news, right? Like everybody's busy right now. In terms of just my social sentiment that I'm gleaning from the world right now, people started school this week. Parents are busy. People went on vacation. People are coming back from vacation. College students are starting school this month and next month. The people are going back to the office. You see that article about Google News and the COVID positive notifications. And yes, if you do look at a COVID chart in terms of infections, we did come down a lot from the winter high, but we're heading into that winter season again, right? October, November, December, January, February, where a lot of people come into contact. So we might see, are we going to see another bounce up in the COVID charts, right? That's just something I'm looking forward in my mind to, because it already happened 2 years in a row. Is it going to happen again? I hope not. But if it does, how's that going to affect economics and such, right? So I'm already forward looking on that. So it has some relation, right, to supply chain and etc. Okay, let's move on. Let's move on to crypto. Okay, I'm giving away a lot of my thought process here. So let's go to total market cap. So what's going on here? All right, so the reason why I enjoy looking at total market cap is it's really, really good for it's basically the index of the crypto market, right? It's basically every single crypto market cap combined. So we can glean some significant information from this. We had that big resistance on top. That would have been the big bullish target of 1.6 trillion, but we couldn't hit it. And now, right, this is the trend line I am looking at. If you have very, very steep rising wedge pattern, and once that gets violated, broken down to the downside, we know from technical analysis. Remember I was saying the fourth, fifth time, right? Sometimes fails, right? So what is this? 1, 2, 3, 4. This is the fifth time that fails. And if you know your Bitcoin chart, this is kind of that $25,000, $26,000 range, which we hesitated so much and we pulled back. So now what I'm watching out for is kind of like this fake rally where we hit the target. We already hit the target in the market cap of crypto, 10 to 20%. We already hit the target. Right? So, okay. We have another comment here from TradingView. So Steve, I appreciate the Asia news. But I think the bigger the news that's going to impact the globe the most was the FOMC Jackson Hole Economics Symposium. Basically, Chair Powell's speech is causing the crash. And if you're talking about South Korea and Morgan Stanley short selling practices, they've had a long history of stopping shorting and stopping foreign investments in their country. Because I know a couple colleagues in South Korea in the finance industry, so that happens. That's just the way their like government is over there. But here in America, retail people, we can't even trade South Korean stocks, so I don't even really look at that much. So in terms of focusing on the crypto market and American stock market, I really think the interest rate that's basically, besides the Russia-Ukraine war and COVID-19 supply chain problems, if you're on my Discord, the interest rate inflation is basically the number one driver of volatility right now. Just if I'm just honest, right? And then there's retail, Bed Bath Beyond, meme stock trading, insanity. But interest rate inflation. If we know Chair Powell's speech, if you follow it closely, which I have for about a year now, since the inflation problem started, is getting news is that we had 2 years of good employment in terms of that was so if you know what Chair Powell is saying, FOMC chairman, is his two main priorities is price stability in the USA marketplace and job opportunities, labor market, strong labor market. That's what he said. But now the focus is flipped now. He's trying to lower demand growth percentage by raising interest rates. And that is going to give the supply chain side, give that time to catch up so it'll balance itself out. But in the short term, there's going to be unemployment, right? He said we had about 2-to-1 job openings to job unemployment. So it was relatively easier, I should say not easy, but easier for qualified Americans in their jobs to get a job right now. And but there's basically too many job openings for qualified Americans, right? We're talking about like big business jobs, corporate jobs. So he's flipping that and saying now the focus for this entire year is on price stability, on interest rates and inflation. So he said, and why did it crash the entire stock and crypto market? Because he said he's just going to continue to raise interest rates until his 2% target is met. And the PCE index is at around 4.6%. So there's 2.6% negative down that we need to go. And that he said it could take like 2 years. Okay, so that's why it's significant. Senators are worried about it. Politicians are worried about it. Big corporations are worried about it. Retail, we're just like stuck with, okay, the grocery. What we feel though, why senators are all upset about it in the past 6 months is what citizens of America and high inflation countries like in Europe are feeling is we have no control over it, is we just have to pay higher prices in the grocery store and the gas station pump, right? Or if you try to take a loan, you try to take a mortgage, you're trying to rent a property, there's higher interest rates everywhere right now, right? So it's that balance of the demand and supply that's causing the issue in terms of basically demand growth was too high, too fast. That's what he was saying. And the next FOMC meeting is next month. So that is literally the number one driver of volatility besides domestically in America and globally. And then the impetus for it was COVID-19, supply chain, and Russia-Ukraine war, energy supply problems, right? And like how that worked out. So that double whammy of two really bad events, global pandemic and war, basically flipped our economy upside down and our world upside down. And so that's what those two big negative events equals down in the market, right? So again, I'm not pointing out one person. It's just usually I'm so focused on charts. It is important to just like think about and talk about for a second what's going on in the world and like why is this even happening, right? Like why are we downtrending? So why did we go down in the past couple weeks on crypto? Why? It's because of that what I was just saying. So how to tie it into the crypto market is there's a very obvious correlation between cryptocurrencies and the stock market and global news, right? It's a domino side chain effect. If tech stocks start crashing super hard to the downside, crypto probably will crash down to the downside as well. That's exactly what happens. If you look at QQQ, big red day. We see this. I flip back to a NASDAQ chart, right? If I'm just circling this, August 15 to August 26, 10 days is basically downtrend. You go back to cryptocurrency market, where's August 16th? literally right here to here. So downtrend, right? Downtrend. So now what remains to be seen is the same similar type of logic and thinking. Okay, if we can hold our 829 billion, if we could hold a 765 billion or not even our 900 billion market cap, that would be good. Crypto desperately needs that right now. Also, USDT is being investigated, etc. Right? So there's all these like issues that's going on. Thank you for the follow, Jackie. I will talk about. I'll rewind to the Nasdaq chart right after this one, because my stream I do stocks for like 30 minutes. I talked about indexes for 20 minutes in the beginning, and then stocks, and then we just went into crypto. But I can flip back to QQQ right after this, after Bitcoin too. So at the 618 of this total crypto market cap, right? So the 4 hour is starting to build a little bit of momentum. The 1 hour as well. We hit that oversold. Remember, crypto's 24 hours, so the moves happen a lot faster. And same thing. This is so bot correlated in terms of algorithms. We had this almost this double bottom lower high, 15-minute, and it already rallied. So this is what I'm saying. Watch out for this happening tomorrow, or Asia, European, wherever time zone you're in terms of this exact little baby rally happening tomorrow or in the next couple of days, right? Like about 1% volatility move. So just watch out for that. Longer term, though, is this going to start our downtrend because the momentum's building, but we should have a low high. Are we going to get a lower high? We could get upside down head and shoulders bull rally, or we could get a rejection further downside. So just watch out for those two scenarios. We just have to play these two support levels. Let's do Bitcoin really fast, and then we can flip to NASDAQ. Okay. So Bitcoin, if we do our pandemic low to pandemic high, right? We bounce off the 76, almost hit our 618, but this is what I'm saying. We get stuck here on the weekly. We got stuck here at $25,000 Bitcoin so many times. Almost too many times, right? 2, 3, 4 times. That's why I started to lose faith in it. I sold my crypto. I was holding Litecoin. I forgot to write that in the Discord, but I sold my Litecoin all right here at the top. Right, so nice capture and move on a particular setup. I might re-enter Litecoin in the future if the weekly chart or daily chart looks good again. But now we're stuck in this consolidation zone, right? Stuck between these two spots. So Bitcoin really needs to hold. Would be nice. Start to lose this support. If we use our candle body wicks, you could see exactly the trend line that traders are using. It was in a channel, basically. Now we lost that. Watch out for this too, because if this happens in like Apple stock or whatever, and it pulls back down, and it's a very weak rally, and then it pulls back down, that's another potential setup. It doesn't always have to bounce up inside, because sometimes crypto and tech stocks just get crushed, right? So high, low, high, low, high, low, higher, high, right? Start to lose momentum as well on the daily. That's why I exited my crypto position. Now, the opposite is true for now, is if this is going to turn to our downtrend, where might I want to potentially enter for potential swing trade? Maybe somewhere in the upper 19,000s, because we lost that big 20,000 number. Okay. Interesting. Maybe 76 range, like 19.3K, 19.3K, or 18.6K, or 17.6K. Those are very, very mathematically calculated numbers by Fibonacci. So see if it gets down there. A 1 hour down cross, 4 hour death cross. All right, so watch out for that. Our 15-minute, again, attempting that little bit of that higher low action. Just be a little careful of this so it's not a fake out. But it's not super oversold in the 1 hour, right? So we could actually bounce up and then pull back down, get a double bottom at 9 o'clock tomorrow in the New York time, and then go up. Or it could happen in the European session overnight. So just gotta watch for that. The thing is, after the China mining ban, the Russia mining ban, the China crypto ban, the South Korea crypto ban, right? the Asia session has been a lot quieter. If you were a crypto trader 4 or 5 years ago, like I was, the Asia session was the Wild West, the most volatile of all time, right? Um, Even more volatile than USA session. But because of the history of crypto, what's happening, a lot of stuff got banned, trading, mining, a lot of exchanges became USA only, so we had to get kicked off and come over to USA exchanges. So stock market doesn't have, commission fees anymore for trading. So even I switched over to more USA based operations, right, in terms of trading and investing. So the Asia market is not that volatile for the USA stock cryptos. Excuse me, the USA cryptos, right? If you're on a purely Asia or purely European exchange, then it's still volatile. But in terms for me, because I cannot legally access that, it's less volatile than it was 4 years ago. Like I'm talking about Raven Coin. I remember one time Raven Coin went 400% in like one day, right? That doesn't happen as much these days. It does happen, but not as much anymore. So hopefully that helps with the Bitcoin. We have a resistance at 22,000. We have a resistance at 23 and 24 if it ever gets back up there, right? But you could just put two alerts and then watch where it breaks. Okay, let's do NASDAQ. Okay, so NASDAQ, what I'm going to do is bring up my NASDAQ futures chart, okay, for the latest data. And this request for Jackie on YouTube. So I'm on a weekly investing chart right now. What we need to watch out for is you could see when we have these shooting star candles in the blue box, this type of mentality, hanging man or shooting star candle, right? That could signify some kind of relative top. Okay, and why do we go down? We had the chairman FOMC give a bearish speech on Friday, and he's hinted on Thursday that he's going to keep raising interest rates until inflation comes down. That spooked the market, that crashed the market down. So what we want to watch out for in the next coming days and weeks is, since we lost the trend line, we're just below it, right? The day trading, 5-minute 15, if you're a day trader, we could see a little bit of a bounce up in the next maybe 1, 2, 3 days, right? As long as we don't get a massive sell-off dump. Okay, in terms of our retail trader is going to wake up tomorrow and sell all their portfolio, or swing trader portfolio. Maybe it could happen. We don't know exactly what everybody's going to do tomorrow. But since it is in an oversold condition, there's a slightly higher than 50% chance that we could bounce up at least a little bit before trying to reject down one more time in the day trading. Okay, so I'm talking about like 5-minute 15, which that Bitcoin example, you could kind of see it sort of correlating here. There's a gap resistance at 12,548. So if we have a higher low and a higher high, that would be the setup for tomorrow or Tuesday trading, like 1% or 2% target maximum, right? But if you're a swing trader and you're trying to capture a little bit more, what I'm looking for is on the daily chart, is this going to be an evening star reversal pattern? If we get, all we need is one green candle for the next couple days, and we get an evening star, morning star reversal pattern where it'll go up, right? So it just depends on how scared are traders and investors in terms of did anybody know anybody else? Like I mean, traders and analysts we knew, but did everyone in the whole world know that the FOMC speech was on Friday and that's going to crash? So it is relatively low, but just watch out. Algorithms and bots like to try to push it as low as possible. So the thing is, we are under the trend line right here. So low, high, where's our lower low? Where is it going to get established? I'm watching for that down here, and then watching for potential lower high bounce, and then possibly continuation to downside one scenario, right? There's also a head and shoulders pattern that traders created basically, and that big deep target could be 6% to downside over time. So that's our bearish target down here. My bullish target is 12,837, the top of that neckline. Okay, so hopefully that explains the two scenarios that can happen for day trading and swing trading. All right, let's keep going here. I'm just going to rapid fire the last couple big cryptos. So Ethereum USDT, on a weekly, we did establish our weekly lower high for investing. Low, high, low, lower high in the liquidity zone. right? Somewhere here, because it's the previous liquidity here and a little bit here as well. There's double resistance from the past, and it's psychological $2,000. So for Ethereum, we want to watch out. This thing could pull back all the way down to 1322 or 1135. So for crypto, what I learned trading all these years, if you're a bull in crypto, is wait for the lowest price possible and then just buy some, right? And that old adage quote, buy low, sell high, right? So for example, in this particular example in the blue box, right? If this is why studying charts is so important, is if you know your history in crypto, when it starts downtrending, don't try to catch it the bottom until you see a formation, right? Until it stops right here. And this is why I went long multiple cryptos. And I sold multiple cryptos in this area at a couple weeks last week, right? So that's why swing trading, sometimes you're not going to get the big, quote unquote 100% gain. Although one of my cryptos did go 50%, but it doesn't happen every single time, right? So that's why it's very important that we know what are we looking for in the market. What are we doing here, right? So buy low, sell high. And again, we do have this head and shoulders pattern here that's current, and so watch out for that on Ethereum. If this head and shoulders 25% to the downside, which take us to 1170. If it's 50% to the downside, we're going to all-time lows for this year, 770, right? So that's something I'm watching out for. If we start downtrending hard and we don't recover, I would try to buy low later, right? But this is such a choppy, as an investor, we're not happy about this, right? Because it went from bullish to bearish. It went bullish to bearish. So that's chop. That means the world and the market doesn't know what's going on, right? Or that means it was good news going into bad news. One way to think about it. All right, let's do Binance Coin. All right, so if you're a follower on my TradingView account, I gave this Binance Coin short potential setup. I think it was like 1 or 2 weeks ago, saying there's at least a 4% range, and it went way, way, way lower than that. Both of my short setups went negative 14% down at the time of this video, right? In terms of, I was saying, watch out for this resistance here. There's something wrong here with this chart. Something wrong. On the intraday, it was too high, losing momentum, right? On this RSI in this region, we found the resistance in the upper 330s, right? So I was saying potential short opportunity, anybody who wants it. And then somebody did short it like the next day. So somebody caught a piece of that. Then we hit this bottom side last week, bottom side, and it went up. Okay, we have a question here. Jackie is saying, I think this person is saying virtual currency, so like paper trading for 2 years and you just started with actual money. Okay, all I would say right now is this is a very difficult question to answer, right? And this is not financial advice. This is just my observation with talking to many traders, fellow traders, and my own experience. Is the general quote is that 90% of traders will lose 90% of their money, real money, in 90 days. In other words, there is a 90% failure rate. There's a 90% failure rate in trading. So if you've been trading virtual currencies, for example, if anybody's been paper trading, right, you need to prove to, I would say because right now in the market, it's one of the most volatile years ever in the past like 10 or 20 years, or like 10 years, past 10 years. Because we have the coronavirus, we have war, we have politicians and governments like failing basically, and everybody quitting in one day, or we have prime ministers trying to resign. We have new infections. We have war. We have aggression. We have people trying to move on with their lives and work and school, and it's a new world. There is extreme volatility, right? It's not a normal time. So I would say if you're paper trading cryptos or paper trading stocks or whatever you're doing, is to keep a log of it. So it's not just in your mind, right? It's not just like, oh, I think I'm doing fine. And it's like, no, no, no. If you are serious about paper trading, for example, oh wow. So here is a perfect example of last time. For example, somebody asked me like, oh, what happens if you just randomly go long and you never look at it? This is what happens, right? If somebody doesn't use proper trading strategies or proper technical analysis, you just random trading, you leave something like this, you have a big loss, right? It's a big lesson. That's just a fake example. I left that there for a really long time as an example. So here, if you're not on TradingView, Jackie, I would recommend to get on TradingView, to get an account. You can activate your paper trading account here, and you could trade US stocks. You could trade US based USD cryptocurrencies for free, paper trading, no money risk, and practice. And it keeps all your history, and you could write a journal, right? This is the practice tool that somebody needs to master. And then also, um, you get the order placement practice as well. You can practice your limit orders, your limit buy, your take profit order on the top, your stop loss, right? This, you got to master this. And then if you're serious about it, is that you build a spreadsheet and you track every single trade that you do. And then you need to prove to yourself, not to anybody else, but prove to yourself that you know 100% that you can be profitable in paper trading. Because if you cannot be profitable in paper trading, you will not be profitable in real money trading. Like somebody could get lucky. I'm talking about, like they did that study where monkeys and like literal monkeys pick random stocks, and then some of them made money, right? Just like random investing. But like the example I was saying, random investing is 90% failure rate. But if you learn technical analysis like price action and some indicators, and you study the charts a lot, um, most professionals that I've talked to say it takes at least 2 years, at minimum 2 years. It could take, for me, it took longer than that, right? To get profitable. But and I studied a lot too. I practiced a lot. I paper traded a lot here on TradingView. I read, you know, almost 100 books, and I studied the charts on multiple time frames. I learned what every single indicator and what every single tool on TradingView is and what it does and how it's calculated generally, right? I practiced these orders. So this is the kind of thing, like you got to take it to that next level. If you're trying to, not all at once, but if you don't know where to start, I would say just create a TradingView account. Anybody watching this who's a beginner, create it. Please try to create a TradingView account. I don't even work for TradingView. I know it's good though. Right? It's the best trading chart service in the world. Okay. I've been trading for 4+ years, crypto and stocks. And again, you need to be a master of technical analysis. You need to become very, very proficient on technical analysis or fundamental analysis, whatever you're doing, right? If you're a financial math numbers person, like a financial sheet person, that's totally fine, right? I'm a technical analyst trader. I love charts. It's one of my passions. And I actually like searching for, I enjoy the hunt for chart setups more than the actual physical act of trading, right? So you're asking me what's my best tips? I gave them right now is create a free TradingView account, paper trade, whatever you're trying to trade. It's probably cryptocurrencies, forex, or like stocks. Um, Take it seriously. Write a trading journal. I would recommend an Excel spreadsheet of like what did you profit or loss? What went wrong? Well, what happened? How can I fix the problem next time? Right? What did I learn from this? What was I feeling? That's what a professional trading journal does if you read the books about it. And then as you get more advanced, you start learning about the price. What is the price action? The price. patterns. Then you have to, at some point, learn your order types. What's a market order? What's a limit order? What's a stop order? Why do you need to take profit? Why do you need stop loss? It's extremely important. And then when you start learning the trading view tools, like what is all this trading view tools? What are all these? Right? At least use them once. Just open it and play with it. It's not going to hurt anybody, right? And multiple time frames, multiple ways of looking at charts, and then there's hundreds and thousands of free. There's so many free indicators. Beautiful, right? You start learning about a little bit more indicators if you want to, right? But every indicator is calculated from the price and the volume. So all you really need is price and volume if you're an investor. But it's difficult these days because algorithmic robot trading is 80% of trading. You're versing robots. That's why humans lose. Because humans trade on emotion, robots trade on their strategies. That's why they win. Right? It's like trying to verse $1 billion, $1 million algorithm. Like there's no, very, very few percentage of humans can win because you have to be able to understand what they're doing and then beat them at their game, generally speaking. So that's what I would recommend, right? There's a lot of books like Technical Analysis, on Trading View. There's so many resources. There's help articles, free articles on the front page. Trading View was like totally different 4 or 5 years ago. There's so much to learn. Now we have live streams, right? And the sky's the limit really in terms of your own personal journey, becoming a trader, an analyst. But for a lot of people, losing real money is terrible, right? Again, this is not financial advice, but I would advise against, like, do not use leverage. I've seen so many people go bankrupt. They blow up their accounts and they never trade again. They quit or they go into serious debt because they borrowed too much money on leverage. Do not do that, right? Paper trade and prove to the world with the Excel spreadsheet, once you get to that level, that you can be a profitable trader. And then I would recommend, I'm being very conservative right now, and then I would recommend, and maybe you don't have to go cold turkey, right? You could just maybe spend 90% of your time paper trade or 50-50, you know what I'm saying? Just like kind of ease into it. Don't just be like, oh, I'm ready now, I'm going to quit everything I'm doing and jump into trading because it sounds so fun or looks so fun. No. The reality is 90% of traders fail. Just nobody talks about it. So, again, this is not financial advice. Your life, your money, you can do whatever you want with it. But, if you read enough books and news articles and, if you read enough interviews of the big professionals like Warren Buffett, I would recommend his books, right? Warren Buffett is very good. I read many of his books and I learned a lot from him, right? Warren Buffett, Charlie Munger, etc. Some of the big, most profitable investors of all time. Right. So I gave so much information right now. I probably went from 0 to 100 miles per hour in that little advice right there. But step one is just sign up for a free Trading View account. And if you really want to learn, paper trade. And then there's all these free tools available. That's what I recommend. And it takes years to get good. So, trading is not for everybody. Emotionally, financially, mentally, physically, right? If you read enough professional interviews, a lot of professionals, they retire because they're saying it's not a normal industry, right? It's unnatural from a certain point of view. Stock trading, crypto trading, nature doesn't do that per se. You know what I'm saying? It's just a human endeavor for profitability. It's a business endeavor. So that's just how I think about it. All right, so I ended with a lot of advice. Again, it's not financial advice; it's more educational. You can learn that in free public books and articles and such. So looks like we ran out of time for today, and I just want to thank everybody for watching and following, and supporting for Trading View. It's Trading View here. We're streaming live on Trading View, YouTube, Twitch. I have a free Discord group as well. You could join. And again, I'm primarily focused on swing trading, investing, stocks, and crypto. And I do have profitable trades, and I do give profitable ideas away for free in my profile when a good setup arises. Thank you so much for following and watching, everybody. Really appreciate it. Hope you have a good week, and I'll see you next weekend around this time for the next live stream. If you have a request, go ahead. You could type it in the comments on my YouTube or something, and maybe I'll do a few requests that way if the stream is too late in your country. So thank you so much. I'll see you next time. Bye bye.